Let's chat banking then. Arundhati Bhattacharya, Chairman at SBI, joins us on the show right now. Ms. Bhattacharya, firstly, this is the first edition of the SBI CAPS Investor Meet. Walk us through what led to this and what you hope to achieve through it.
As you know, when SBI CAPS was set up, the brokerage service company was also within the SBI CAPS fold. But subsequently, we decided that it is better to segregate them out. And accordingly, SBI CAPS Security Services Limited, or as we call them SSL, was set up. Now, SSL has become a full brokerage company. They have a large number of clients and they do quite a bit of turnover. But we have not been actually having any investment days, so to speak, in order to bring the investors over and have them interface with the various companies that they are interested in. Given the fact that we have access to a very large number of corporates, and corporates also would like to access the investors and explain what are their plans and what is the future trend going ahead. So we thought, bringing them together on one platform would be very useful, and that is the reason why we have started this day. I think we have started at a very auspicious moment. We all believe that we are on the cusp of the next round of growth, and therefore hopefully this will be an annual feature which we will be doing regularly.
But the investor meet comes at a time when the sentiment is slowly picking up. What is your sense of the investor sentiment at this point of time?
If you see the way the world is positioned at this point of time, really speaking, I think there is a lot of interest in India. Because if you look around us, there are a lot of negatives still going on. For instance, China, it is expected that growth will slow somewhat because they are getting into a consolidation phase. If you look at some of the other countries, for instance, Europe is still, iffy, though we still believe that the revival will come. Of course, the US looks very good. But if you're looking at the emerging market space, Russia, for instance, on account of the Ukraine issue and the Crimea issue, they are at this point of time off color. So you are coming back to India as one of those spaces where people see a lot of growth coming in. That coupled with the fact that we now have a government that is a clear majority government, we also have a government that's been chosen on the plank of bringing back growth. Given these points, I think India is getting a lot of investor interest. Also, if you look at our demography, there is a crying need for growth. That being the case, and the environment having become more conducive, I think we definitely have all the makings for a very good positive cycle.
Ms. Bhattacharya, what do you make of the first few initiatives that the government has taken since it took over? And do you believe a lot still needs to be done to improve investor sentiment?
I think the first few steps have been extremely positive. If you look at the very first step, that is inviting our neighbors, the SAARC countries, to the swearing in, that was, I think, an extremely good step, because at the end of it all, we are in one part of the world and we need to grow collectively. That is the first thing. The second thing is about empowering bureaucrats. After all, it is the bureaucrats who will be doing the execution bit of it. And therefore, unless you can get them back on track and get them to act positively, it is very difficult to take anything forward. So to that extent, I think that step 2 is something that is really very good. Many of the fears that the bureaucrats have, they have been assuaged. I think repeatedly what the government has said, that they believe in change and not in taking revenge. That again, I think, is something that has gone down exceptionally well. So I think all the steps that have been taken, they are necessary steps, but we must understand that we have to be a little patient. Nobody at all, neither the banks nor the government, nobody has a magic wand. So it will take a little time for the steps to be taken, but I believe whatever has been done till now, it has been absolutely positive.
Well, the RBI has recently cut SLR, but that has not resulted in any change in interest rates. What is your sense on the rate regime going forward?
When RBI cut the SLR, I had said that it could be two things, One, of course, is the fact that they are now decreasing preemption. so that banks would have more resources to lend. But I said that this would not have any immediate impact, because banks are already sitting on excess SLR, excess liquidity, and on the other side the credit demand is also very tepid. But I had also said that this maybe indicates that the government's fiscal deficit will be controlled, that there will be less need for the government to actually borrow, and therefore you would see a fall in the government yields. And that has actually come to pass. If you look at it, the yields are down, the 10-year G-Secs are down to around 8.5, maybe a little over 8.5. And therefore, as you see this happening, you will find that the cost of borrowings also will come down. In fact, I think today morning or just a few days back, I was seeing in the papers that the money in the market is now being sourced at less than 8%, which is the repo rate. So, this downward pressure on interest rates is very good. And if this continues, then maybe, we will be seeing RBI acting on its promise that they may be looking at a little lesser interest rates.
So how much of a factor will interest rates be as far as growth and new investments are concerned, now that the sentiment seems to be picking up slowly?
I think things will slowly start changing. People, I think, do realize these days that policy rates is not what should drive your investment decision. It should be the ecosystem around what you are trying to do. It should be your ability to sell whatever product you are trying to bring. It should be the kind of demand that is there in the market. But basically, I think the main thing is the ecosystem, and the ecosystem means whether infrastructure is available. It means whether the policies that will help in doing whatever you want to do, conducive policies are available. So the entire ecosystem is very, very important. And when the ecosystem looks to getting better, people know that, it is time to make investments. And interest rates are something that will follow suit. In fact, this time our office, especially our economic research department, has been very closely following the prices at the wholesale markets, the mandis. And we have found this time that unlike in the earlier elections, the prices in the mandis this time have actually come down. And it has not increased, though we are now in the middle of summer, though there is a fear of El Nino effect. But even then, if you compare to the earlier elections, I have data for the first 4 weeks after elections, and we have found that overall the prices have tended downwards at the wholesale markets. I am not saying that inflation is under check, no way. But I believe, that the expectations have been very well anchored, because there are steps in the offing that will ensure that we manage the structural issues which is actually causing this inflation.
So in terms of PSU bank reforms, has come for late against the backdrop of the PJ Nayak report, and what is your opinion that are the low-hanging fruits that the government and RBI can look at, when it comes to reforming this sector?
See, below the 50% mark, I am not too sure. But definitely from its present state, yes, I think that the government will seriously think about it. Regarding the holding company that the PJ Nayak committee has suggested, a proposal for this holding company has actually been doing the rounds for quite a while now. I think it was put up sometime in 2009 to 11. And it was looked at in great detail. So definitely the government will be looking at all of these areas because the government is very clear that they will be there in order to ensure that adequate capital is given to the public sector banks. But yes, the means may be different. The public sector may go more to the market. And to make that happen, the government will do whatever it takes to ensure that, the proper valuations are received.
So focusing on the bank then, Ms. Bhattacharya, what is the sense on your asset quality? Will there be an improvement in the coming quarters compared to last year?
A very difficult question, because again, as I've told you, I don't like giving guidances in respect of the bank's performance. I would only like to say that let us see a trend being set before I declare this. I do not want to say something and, be held to it in the next round of interviews that I do with you. But let me tell you this much, that we are in much better control. So whether they will slip or not, a lot of work still needs to be done. But at least, there is very clear control on all of the units. So most of my people, if you ask them, they will simply rattle off the names, from the top of their heads. So therefore there is much more engagement, much better control, and this is something that we intend to continue. Means it's not something that we are going to sort of, take our foot off the pedal, and therefore, hopefully this amount of hard work will bear some results.
Well, the government has made it clear that it will not infuse further funds. They are very clear that banks, they need to grow independently of government capital infusion. Do you think it's going to be impossible, not for SBI, but for other PSU banks to grow independently without government support, government help?
See, this is something, again, I really wouldn't be able to give you any guidance on. While we have had discussions, we have not had discussions on how much the government will give overall. We have had discussions about our own bank. And to that extent, I can tell you that while the government is quite committed, that yes, they will support, they have also asked us to look for ways and means in which we can raise capital, and I think that is correct. That is how it should be. So to that extent, yes, we will be looking for capital. I basically don't really need capital if I'm going to grow at only 15%. I have enough capital for that. I have also adequate headroom in the 81 and the tier 2 areas. But should we see the economy turning around rapidly, and should growth go up to 17-18%, or should we look at a merger of the banks? Any of these extraordinary items, if it happens, then yes, I might look to going back to the market to raise capital.
Right, so give us a sense of your credit growth for the first quarter, especially in terms of corporate credit. Has there been any pickup, and how much growth are you seeing in your retail portfolio?
Not immediately, no. See, there are a lot of discussions going on. But discussions, these are for the larger amounts, these things take time. Because from the planning stage to getting the approvals and then putting up the proposal and doing the financial closure and the documentation and then drawing the money, it takes a lot of time to actually fructify this. So this is not something that will happen tomorrow. If a corporate comes and talks to me, and yes, they are talking to me, it doesn't mean that my trade growth will jump up tomorrow. So we have to understand that the trade growth may start looking up only in the last quarter of this year. I don't really believe that it can go up very rapidly before that, and we will be very choosy this time. So we will ensure that what is required to be there, that is the approvals, etc., that they're all there, that the full financial closure is done, that the equity is correctly sourced. So given all of that, I think it will take a little time for us to start seeing the ramp up.
And finally, Ms. Bhattacharya, bond yields have recently raised to a 5-month low. Is it sustainable, and can we expect treasury gains from SBI? Because historically, every time bond yields have gone down, PSU banks like SBI, they've always reported a bumper treasury profit.
Surely it should have some good impact on our mark-to-market gains. But as you know, the mark-to-market gains are not taken in the books as a conservative principle. We'd have to sell in order to book the profits. So we'll see how much of that we can do. And definitely this will have an impact, because what happens traditionally is that when interest rates are going up, the loan book supports the bank. When interest rates are going down, it's the treasury book that should support the bank. So to that extent, that is the classic thing. But last year, in fact, was one of those few years when both the loan book as well as the treasury book were giving a kind of a negative impact, rather than one giving a positive and the other giving a negative. That, I think, is getting corrected currently. So it's a good trend, and I hope that this will continue.